So welcome everybody to our Tuesday evening webinar. My name is John Skelton. I'm with apexinvesting.com and welcome to our Thriving in 2020 webinar. As always, got to put up some disclosures here. Trading involves risk, may not be suitable for everyone. Make sure you know what you're doing before you do it. Tonight, a little bit different webinar. Uh, Abraham says the screen looks small. Does everybody else see the screen? Is it coming in just fine? All good here? Okay. Yeah, Abraham, looks like everyone else saying looks fine. Got a couple hundred people say it's good. So you might want to try to resize or pop back on. But Daryl was going to do a walkthrough webinar tonight, but we're giving him the night off. A little bit of an impromptu webinar here. I want to do a little bit of talk to you a little bit about reading market structure. Some of you might have been in the elite room this morning, and someone brought up saying, hey, that looks like it might be a power play 2 on a 30 tick chart. And there's a lot of people that said, what is a power play 2? What's this all about? And so I popped in and said, hey, you know what, let me cover this a little bit. Let me, because that's something that you're going to hear about in the elite room a little bit. Power plays are part of an older system, an older Apex system, part of the APT, which is called the Apex Power Trading System. Some of those videos and trainings are still on the site. You have access to them if you have gold member access. Okay, silver member or like free boot camps not going to get you access to that because silver and boot camp focus mainly just on the sniper trades. But a couple of the trade setups in the old APT series were called power play setups. Okay. And back then we taught how to actually trade those off of a 10 tick chart, and they were a certain kind of trade. Right now we mainly just use that same concept of what we call power play 1 and power play 2. We use that same concept, and you'll hear Lori talk a lot about it as well, based off the 30 tick diagnostic chart. Okay. It's a form of divergence, and I'm going to show you that a little bit. I also, if we have time at the end, I want to talk to you guys a little bit about some trending divergence. I did a webinar last week just for the Thrive members, covering the JFT trade. And I taught divergence a little bit different, used some pictures, used some analogies to help understand divergence a little bit. If I have time tonight, I'll recover that at the end for those of you that weren't on the JFT. And that way, for those of you that were on it, you don't have to sit through it again if you don't want to. So I'm going to do it at the end if we can. Okay. So what is Apex Power Trading? Like I said, if you have gold access, you do have access to these old systems, okay, and some old trainings. Well, what has changed? Why are they still on there? And I want to show you where to find them. Okay. Now, a lot of people say, oh man, I'm going to go back through and watch those, and maybe something there is really cool, and maybe I'll do better with something, one of those old systems, or maybe it'll, fit me better. Okay. They're there because there are some of our older members that still use certain aspects of them and combine it with sniper. Okay. I'll say this, if you do not have a full mastered handle on sniper, do not spend any time going back through these old courses. It will confuse you, it will overwhelm you, it will mess you up. Okay. They were good systems, they were overall good systems. Sniper is better, plain and simple. If you do go back and watch some of those older series, I mean, these are years old, okay? I mean, you'll just hear the difference in the way we taught order prints, the way we taught things. Order prints has developed so much over the years. It's grown over the years. We've learned so much better how to use it over the years, okay? These are older courses, all right? They're not using up-to-date indicators that we use now. They don't use the up-to-date reads that we use now, okay? Sniper is still your top tier number 1 to focus on. after you've mastered Sniper, if you want to see some of these things and use some of the market structure, some of the setups as an added layer, like to help turn a number 2 trade into a 3 or 4, where it's combined with some levels, it's combined with, and you might hear this sometimes randomly from some veterans in the elite room, like, oh, that's a, that's a Filter TX trade, and it's also a power play, or it's also a, would have been a mini magnet cross, or and you're like, what is that? And it's, some of these older entries can be, learned. You can watch them and help combine it with what you already have. Okay. No, Russell, the breakout trades is part of a mastery course, not part of the APT course. Okay. But just so you know, because that's been a question. Let's just look here. All right, so let me pull over the Apex website here. Now, again, if you have gold access, you can go down here to the bottom, and right here it'll say access the elite membership page and quick links. If you have silver, you're only going to see certain options. If you have gold, you'll see other options. Do not spend any time going over this KISS system or this ATM or whatever. Again, if you haven't mastered Sniper, just stay with Sniper. But if you want to check out the Apex power trading courses, okay, these older courses are set up differently. They're going to take you a little time to get through them, and they're set up in a course software, meaning you have to go unit by unit. You have to go video by video. You actually have to answer quiz questions before you can even get to the next video. Now, most of you, if you've mastered Sniper, you've been with Apex, you can just hit the quiz and you know the answers and you can get through here pretty quickly. But this is where it is, okay? There's all kind of old trades in here, a deviation reversal trade, some directional trades, reversal trades, all kind of stuff in here, okay? All this old template and indicator stuff, all these courses were built with old templates, built with NT7. You're not going to need to worry about all that kind of stuff. You can keep going down through here, and there's just all kind of trades in here, okay? Old stuff we used to call base jumps, power slings, elevators, third bar slings you're familiar with, but that has become really advanced. Power play 1 and 2, okay? Mini magnet crossovers. Again, this is for later on after you've mastered Sniper, okay? So yes, in these courses there was a specific trade setup and trade entry that we called power play 1 and 2, all right? But when you hear that now, we're just looking for that market structure setup of a power play 1 or 2 on the 30 tick chart, just to show us a market structure. Then we're going to look over at our 10 tick Sniper chart for entries. Okay, so power play or power trade, power play 1 and 2, they are not, and this is the, I'll tell you this right here. We did the power plays for a long time. I taught them for a long time. I did all the training on them for a long time. You can ask Marion. I did how many freaking video webinars during that open house like 4 years ago on power plays. I'm talking hundreds of people. The number one biggest issue we had with power plays and with training on the power plays and with questions and confusion on the power plays was that sentence right there. So I'm going to pull a John, and I'm going to repeat a lot tonight, okay? Power plays are not for trending markets. They're for range-bound markets, and range-bound markets only, okay? Now again, tonight I'm not teaching entries from the old power play system. I'm only teaching you how to look for the market structure on a 30 tick diagnostic chart. Then that tells you, hey, there's a particular market structure setting up right now. I can read that, I understand it. Now I want to go look on my Sniper or Simplicity chart for an entry at that point, okay? So it's basically just used as another layer or level of confirmation and adding to the probability. Does everybody understand that? This is not a trade setup. So it's not about asking, oh, so when I see that, where do I enter? No, when you see that, you look at your normal sniper chart for an entry in the direction of the power play, which I'll show you. It's just an extra confirmation. Understood? So, power play 1. Okay? Power play 1 and 2. Let me just get this out of the way here. Power play 1 and 2 are both, one of them is a form of divergence, and one of them is a form of hidden divergence, you could say, but range-bound divergence. In Sniper, we have a trending market divergence trade, right? In Sniper, what is our trending market divergence trade? Right, ODD or HDD, right? Do we do ODD or HDD in range-bound markets with Sniper? No, we don't, okay? So in Sniper, using a 10-tick Sniper chart, the market must be trending in order for us to even look for ODD or HD, right? On the 30-tick chart, when we're looking for a power play 1 or 2 structure, we're only looking for it in range-bound markets. So power play 1, you could call it, and let me just throw in a little note here. Let's just be honest. How many of you have been in the elite room and Daryl Martin says something about, ooh, divergence? And Lori says, or someone else says, that's not divergence. He says, well, if you look back over here, it's a form of divergence. It may not be the trending ODD divergence, but it's a range-bound kind of divergence. Have you heard that? Where it almost feels like there's conflicting, like you're getting conflicting information, right? And you're like, okay, the kids are fighting again. Brother and sister crosstalk, they're fighting again, right? Well, I would say 90% of that is literally a difference in terms, a difference in vocabulary, a difference in definition. And I want to help you understand some of that definition tonight, okay? Yes, sometimes it's just a different market read, and it's kind of nice to have some of that, right? You don't want to get confusing, conflicting information, but there's times where I'll give you a read on something, and it's one way. Lori's is a little bit different. Daryl's a little bit different. And that can actually be helpful to see it from different lights, right? But oftentimes it's just a difference in definition. That's why you hear me say a lot, especially if you were on last week's webinar, trending divergence. Remember how many times I said that last week? For those of you that were on the JFT, trending divergence, trending divergence. Tonight, you're going to hear me say range-bound divergence. And those two differences of definition will clear up 90% of those, confusing times. So power play 1, you could call it range-bound divergence, okay? This is not for trending markets, for range-bound only. And this is only regarding the 30-tick chart, not your 10-tick. Okay, don't even be talking about a power play 1 or 2 in the elite room on a 10-tick chart. You will get smothered. You'll get smothered by the market, you'll get smothered in your account, and you'll get smothered by other people. And Lori saying, Only thing in the room that's talked about is a potential power play 1 or 2 structure on a 30-tick. Okay? And it's the basics of divergence. When the market goes a little further on less volume, okay? Same thing with same rule applies as our ODDs, right? We want it to be less than 80%, but we prefer closer to the 50% area, right? Everybody understand that? So we want the market to go a little further on less volume. Well, how much less volume? Well, we want that ODD number to be less than 80%, but closer to 50 is better. Now, here's the difference though. Here's the big kicker. This is the first big kicker to understand in these is range bound, not trend. Range bound, not trend. The other big difference with this range bound divergence, the other big difference with this range bound market goes a little further, is it cannot go further than a bar size. Meaning what? How far would that be? Who can tell me? Exactly, 30 ticks. Because we were talking about a 30 tick chart only. The two peaks cannot be different, more different than a bar size, meaning 30 ticks. So that right there should already tell you what? Clearly we're looking at range bound markets, right? Because when you're looking at a trending market, we would expect bars and bars and bars potentially, right? Between the two peaks. Does that make sense? Okay. So it's basically like you're almost looking for a double top or double bottom. Does that make sense? Where they're almost exactly the same, but a little further or a little less. Like they're close to a double top or a double bottom. Okay? So would this right here be a scenario on a 30 tick chart that we would want to look for a power play 1 or 2? This is a 30 tick chart. Is this, when we see the market acting like this, do we even think about looking for a power play 1 or 2? Okay, good class. Just a little throwing that down in there. This is clearly a trending market. In a market like this, we want to look for trending divergence, right? Which we actually have right there, don't we? Okay, this is not a time to think about power play 1 and 2s. Right? And just like we've always talked about in the past, and I've given analogies of in the past, when we're looking at the different markets, remember how we talked about, think about it like a clock. If the market's between this 9 and 3 box, it's choppy or ranging, right? If it's going 130 or 430, it's trending. So to look for power plays, we're actually looking for a big, or for a ranging between that 9 and 3. Okay? So let's take a peek here. Once again, my slides are sticking. There we go. Okay, so is this a clear big ranging market, or is this on a 30 tick more of a ranging market? Is there a big difference between this chart and the chart we were just looking at, right? Okay, so in a ranging market, not a choppy market, not a 1 bar up, 1 bar down, not a 1 2 1 1 2 1, not chop, but ranging market. Notice here when the market pushed down, what was this number? 2261, right? Then the market came up. Then when the market came back down, do you see here where the market went just a little bit further down than right here? Not much, right? They're almost the same, but this one went a little further down. Okay? And on what volume? Half the volume, right? With half the volume. See that? 50%. So in a ranging market, the market has to go a little bit further. This is a power play 1. It's got to go a little bit further, meaning within 30 ticks. It can't kind of come way down here, right? It's got to be within a bar size of the last peak. It goes a little bit further on half the volume right there. So that's a power play 1. It went further on less. which is the definition of divergence, right? We all understand that. The basic definition of divergence is it went further on less. The difference here compared to trending divergence is we're specifically looking at it in a ranging market only, and the two peaks have to be within a bar size, within 30 ticks. So that one rule right there of the peaks being within a bar size should fix 90% of the problem of not trying to find this in a trend. Understood? So our old power play system, we would look for that push down, pull back, then we look for this next push down. The market goes down a little bit further on the less volume. This bar reverses back up, and we would enter one tick above the close of this bar if this bar had certain clusters and order prints and stuff like that. Okay? Now, again, I'm not teaching you that entry right now. I'm just letting you know, obviously, when we have divergence pushing down, obviously we're looking for a trade to go up, to go long, right? So when you see this type of market structure on the 30 tick, meaning you've seen this push down, you see the market coming down just a little bit further, and you see it's a lot less, like you'll see it's currently in a potential power play 1 state, right? Just like you can see the market's currently in a divergent state, right? Okay, so when you see that live, you don't have to wait for this bar to close. When you see that live on your 30 tick, exactly, and you switched over and looked at your sniper chart, and you had a valid long entry on your sniper 10 tick chart, do you feel like that could be an extra confirmation on your sniper trade? Do you feel like that can add an extra layer of confirmation, an extra layer of probability, and even kind of build into the whole helping you take a number 2 trade, turn it into a 3 or 4? I mean, just look at this chart here. Again, this is a 30 tick. So this reversal bar alone was 45 ticks going up, right? And then another 15, another 15, and another 15. That's a 100 tick move going back up, right? So when that 30 structures that way, that could produce a 100 tick turnaround, and I've got a sniper entry right here at the same place, I'm going to feel really good about that. Okay? So does everybody understand that? How this is simple divergence, but it's simple range-bound divergence, with the big rule being it's got to be close, almost like a double bottom within a bar, because that helps you make sure that you're in that range. And do you also see the power of why we look for that structure on the 30 tick? Because you could have stuff like this all over the 10 tick every 20 seconds on NQ, right? I mean, you guys understand that? Why this is powerful on the 30, and you don't want to sit there and look for it on the 10 in the NQ environment right now, because you'll see it every 20 seconds and it'll chop the crap out of you. You want to see it on the 30, the larger overall market structure, okay? And then drop down to your 10 tick sniper for that zoomed in snipe trade. Got it? Okay. So that's a power play 1. Power play 1 means it goes further on less. Okay? So let's get these slides to flip over. Okay, so here we've got the market coming up, market coming down, market coming up, market coming down, market coming up, market coming down. Here we're in like that 9 to 3 box on the clock, right? Same type of situation. The market came down here on 19,000. Then it came down even more on 3,300. That is a huge difference, right? And it just went a little bit further. It didn't go 30 ticks further. It just went a little bit further, with only 17% of the volume. If I'm seeing this in a range-bound environment, if I'm seeing this structure on the 30, I want to really be watching my 10. Do I have a valid sniper trade there? Or, you know, pretty close in here, do I have a simplicity trade? Sure. Okay. But, I mean, this one went up 45 ticks, 60 ticks, 75 ticks, made a pullback. Hey, I'll take it. I'd like to see this larger scale structure showing me range-bound divergence. Because what is this showing in a range-bound divergent market? Hey, we're coming back to the bottom of the range. It tried to push out of that range a little bit and lost. It had no strength to it. I mean, that's a huge drop in strength, isn't it, guys? You see that? Huge drop in strength, absorption, rejection, exhaustion, go the other way. And we always talk about that, or I always talk about that with you, about what's behind the scenes. Why is this trade there? What's happening? And we talk about how we always look for that loss of strength, look for that absorption, exhaustion, okay? And we want to trade against it. So when I see this market come down and leave this ODD number of 19,000, then it pulls up a couple bars, and then as it's pushing down, down close, down close, down close, down close, I see the ODD live. Do I know right here, already live, that I'm in a state of range-bound divergence, that I'm in a potential area of a power play 1? Yes. So when I see that that's current, then I can look at my 10 tick and look for a reversal bar up on the 10 tick to enter. I do not, somebody asked, do I have to wait for the 30 tick reversal? No, I don't. Because if I wait on that 30 tick reversal on this setup, that's already 45 ticks into the move. I just want to see the current state of range divergence, the current potential state of a power play 1, and then look at my 10 tick. Got it? Okay. So guys, that's a power play 1. Is that simple enough? If you guys understand divergence in general, you should understand a power play 1 really, really easy. Okay. 30 tick only, range bound only, the two peaks within a bar range, meaning 30 ticks of each other, and then you hop over to sniper and look for an entry. That's it. So when you look at your 30, you're already looking at a 30 tick, right? You're looking for your end zones, you're looking for your mini magnets, your big levels, your stacks. We know the 30 tick is our big roadmap, our big playing ground, right? Okay. So you're already looking at it. Now just in the morning in the elite room, start looking at this. Okay. Yes, you can look at this on any market. I say 30 tick, but if you're using a 20 tick ES, yes, you can use it on that as well, and the same rules apply. One bar size. So therefore on ES, let's say you're using a 20 tick, then your two peaks would have to be within 20 ticks. Okay. Or same with YM. All right. So all the same rules apply. So you're already looking at 30 tick. This is one other thing you can look at on the 30 tick during ranging markets. Like on those days you're like, oh man, the market's not trending crazy today. It's kind of ranging. What do I do? Okay. Boom. I remember that. It's on my list. Things to look for. Questions to ask in a range-bound market. Let me keep an eye on that 30. Look for a power play 1 potential setup, and then look at my sniper chart. Or if you hear somebody in the elite room or Lori talk about, oh, power play 1 or 2 on the 30, now you know what she's talking about. Okay. Someone says, does it occur more at night? Doesn't have to be nighttime. It's just range-bound market times. That can be daytime. That can be nighttime. That can be, you know, lull times before in big news events or earnings. Or, you know, or it can come after the big trends, but not necessarily a particular time of day. Okay, so power play 1 goes further on less, range bound only, within a bar size. Look at sniper. Any questions in general on power play 1, what we just covered there? Any questions before we move on to power play 2? Joseph, no, DR does not play any role in what we're looking at here. Okay, here we can just look at DR. We're only looking, that is a good question actually, Joseph, thank you. For those of you that were on JFT and know how we look at DR divergence, we are not using DR for this. We're using ODD. We're using the oscillation detector for this divergence. Okay? All right? So, no, I don't have a bunch of screenshots of sniper to coincide. I mean, when you see this market structure, you look for a sniper trade. Okay? All right, so that's power play 1. Goes further on less. All right? Yeah, I'm not here to go over exact entries. I'm here to teach, just like the title said, about reading market structure. Okay, and understanding all right, here's the structure. I see what the market structure is telling me. That is the bottom of a range. It's losing steam. I want to see if I've got a sniper to go against that exhaustion. Okay, so power play 1, further on less. So now we've got power play 2. I almost hate to say this because I don't want y'all confusing yourself. You got to keep this all straight. You could call it range bound hidden divergence. Okay, and I only say that because I've heard it talked about in the elite room that way. I don't personally like that definition, but you'll understand why. Once again, this is not for trending markets. It's for range bound only. If you try to say the word power play 1 or 2 in the elite room in a trending market, you're going to get your head bit off. Okay? Ask questions, but keep in mind, range bound only. So this is the opposite of a power play 1. This is when the market goes less, but on more volume, right? Literally the opposite. This is where we want to see 120% of the volume, or preferably double the volume. Okay? Again, range bound. Again, with the peaks have to be within a bar size. Same rules apply. Same range bound rules. Same 30 tick rule. Same within a bar size rule. And what is the point behind this trade? It's saying even though it came in with a lot more power, with a lot more momentum, with a lot more strength, with a lot more volume and orders than the last push, this push was stronger, and it just like burnt out. It's like it burnt out like a Roman candle on 4th of July, right? It shoots out high, bright, and it fizzles. It's done. Okay? So even with more strength, it just couldn't go. It got rejected, got absorbed, got exhausted, got rejected from that point. Okay? So let's look right here. See how this market comes down right here. So we're in a range bound market. Okay? So right here, within a range bound market. Market comes down on what? 33.01. Okay. Then it comes down here on 91.58. Had 277% more. Okay. You know, within 30 ticks, within a full bar size. Well, 30 ticks actually, you know, 2 bars. So do you see what I mean here? The peaks are close. Does everybody see that? We're not talking about a peak from here to here difference. We're talking about, you know, within a full bar size. And you see this push down 3,300. This push down 9,100. Almost 3 times as much volume on this second push down. And it could not even get to the same low. Do you get that? Everybody see it? With 3 times as much volume on the big 30 tick range, it could not even get to the same low. So that's a pretty good indication there that there's just some rejection going on there. So when you're looking at this live, You see the market's pushed down, leaves you an ODD number. Market comes back up, hits the top of the range. Now as the market's pushing back down towards the bottom of the range, down, close, down, close, down, close, you see your ODD. You will already see that that ODD number is higher than this last one down, right? You'll know that, hey, I'm currently in a state of power play 2 potential. There's already more volume in this leg down than there was the last one. You'll see it. Correct? Everybody follow? Everybody agree? Everybody understand? Okay? So then question. Market pushes down here, 33.01. Market pushes up. Let's say the market starts to come down, 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 down. Let's say this bar has closed and I'm seeing, wow, I'm already at like 5,000 ODD or OD. I mean, I was only at 3,300 here. I'm already at like 5,000. Am I currently at this point right here in a power play 2 state? Okay, good. That was a trick question, and only a couple of you didn't quite get it, but I asked it a certain way. So it pushed down here on 3,300, pulls up. Right in here, I'm already at 5,000. I'm not yet in a power play 2 state, because for it to be a power play 2 state, where does it have to be? It's got to be within a 30 tick bar range of the last peak down. Make sense? So I know as it's coming down, hey, the volume's already surpassed. So check that off the list. The volume's already surpassed. There's already more volume in this push down. If I get, so I want to keep an eye, if I get down into that same 30 tick range down here, up or down, then it will be a valid state of power play 2. Does that make sense? Okay. Yeah, basically, David, yes. That's what I was going to get to. The power play 2 is basically the same thing as a what? In our sniper trades, in a trending sniper trade, what is this similar to? HD, exactly. But it's just, this is, the power play 2 is confined to a 30 tick chart in a range bound market with the peaks being within a bar size, which is 30 ticks. That's the difference. But it's the same concept of more volume, but doesn't go as far. Gets rejected, and you see what happens, right? So as I'm seeing that state coming down, when I get within that 30 tick range down in here, I'm keeping a pretty good eye on my sniper chart for a valid sniper trade going in what direction? Long, right? So, and then as I'm keeping an eye on this chart, I see the market going back up towards what? Top of the range, right? What happens up here at the top of the range, by the way? You could call it ODD, but we're kind of in a ranging market here, right? So what is that right there? Yep, power play 1 that I just taught you. Everybody see why? So went back up to the top of the range, went a little bit further on about half the volume, and then what? Crashed down. That's a great screenshot there, right? You got a power play 1 and a power play 2 right there in a ranging market. So everybody see the difference. The power play 1 went further than the last peak on less volume. The power play 2 had a lot more volume, but didn't go as far as the last peak. See that? I try, Jeff. I try. So everybody gets that this is not a trade in and of itself. We are not taking trades off the 30 tick. It's a market structure read. Okay? And more than anything, I wanted to do this because, you know, it came up in the elite room earlier and it was like, wait, what is that? And what, you know what? So I popped in and said, you know what? I'll cover it tonight. Let's answer those questions for everybody. Let's help you because you've learned a lot, especially those of you that were in Thrive, about how to watch the 30 tick and how to have it open and look for certain things. Now you've got one more thing you can look for on that 30 tick in range bound markets. Okay. So power play 2 means less on more. It didn't go as far even with more volume, or another way to say it is range bound hidden divergence. So here's another example right here. Actually, this was the first chart I showed you earlier. This is another chart that has a power play 1 and a power play 2 on it. So ranging market, clearly, right? Is the market pointing 230 or 430, or is that a 9 and 3? It's a ranging market, right? So the market comes down here on 776, leaves that OD number there, pops back up to the top of the range. So as it's pushing back down towards the bottom of the range, what kind of OD we get? 2261, 291%, almost 3 times, right? Almost 3 times larger. But the market did not go as far, right? But notice they're close. It's not 5 bars between them. It's less than a full bar size between them. You know, still close to the bottom of that range. We look at our 10 tick chart, look at our simplicity chart for a valid trade to go up. Okay? Now, as the market goes up here, this push of the market goes higher than the last high, right? This was the last high of the range. This one went a little higher out of the range. What is this? Is this a power play 1 or 2 right here? Who can tell me? Is that a valid anything? Nope, it's nothing. It is not a power play 1. Because this was the high here. Now we've got this new high, but what is the number? 157%. See, this push up had 2702. This push up had 43. That's not divergence. That's not a power play 1. That is not more on less. That is nothing. That's convergence. That's what you'd expect. You'd expect more. You expect higher on more. That is not a power play 1 or 2. Okay, everybody understand that? That is not a power play 1 or 2. So now the market has come down, bottom of the range, come up, top of range. Down, bottom of the range, up, top of range. Now it pushes back down to the bottom of the range. The market went down a little bit further here than it did over here. Remember this? This was the first screenshot I showed you a while back, teaching you the power play 1. Because it went just a little further, but on half the volume. That is now a power play 1. Does everybody understand that difference? The market goes further on less volume than the last push down. Here the market went up further on more volume. That's not divergence. That's not a power play 1. So again, another chart example of a power play 2 and a power play 1 on the same screenshot during a range bound market. That's 2 charts we've seen now with a power play, a PP1 and a PP2 on the same chart in the same range, right? So you kind of see why we kind of look for these in those ranging markets. Okay. So now market pushes back up to the top of the range. Does this point go higher than this last high? So yeah, it went a little further. Is that within a bar range further, or is that too far? That's within a bar range, right? And right here, 82%. Technically, that's divergent. Technically, it went further on less. But that is right at the line because it's over 80%. We really want it to be 80 or less. And you could say, well, it's only 2%, not a big deal. Well, remember, the rule is minimum 80, but we really want it to be closer to 50. We really want it to be half. We really want to see the big drop off, right? Does that make sense? Like, there's a big difference. I mean, look over here. 776 compared to 2200, 291%. That's a big difference right there, right, guys? Like, that's a big difference. Over here, 2261 down to 1140. That's half. Like, that's a big difference. And look what all these trades I've shown you that have either been like half or like 200% more. We've had some decent moves to them, right? That's what you want. You want that really kind of slap in the face clear difference of just exhausted. That it's a little over the line, right? Yeah, you could say 82% is close enough to 80, so it technically close enough meets a rule. Like, it's not quite slapping you though, right? These are slapping you in the face. Make sense? I mean, I've got a 10-tick chart up over here. I want to show you something. This is completely different, but this is a 10-tick chart. Is this market trending right here, or is it ranging? Let me rephrase it. The left side of the chart, this is ranging. Everybody agree? This is ranging and chopping. This is trending. Yes? Okay. Market goes up, pulls down, goes up, pulls down, goes up, pulls down, pushes way up here, and look at that number. The strength dropped big time, right? This push up was only 37% of this push here. You got 1788 compared to 656. That's a big drop, isn't it? 37%. Everybody see that? Big drop. Then it pulls down and goes even further up, only 29%. Everybody see what I'm talking about here? So you got a push up on 1700 of volume. Then you got a higher push and it drops way down to only 656 of volume. Then it goes up even higher and drops down to 188. Does that slap you in the face saying done, done, and done? I mean, can you see that and go, well, that thing's freaking exhausted? Yeah, there's double divergence. Like, done and doneer. Everybody see that? I think this was yesterday's. Yeah, this is at one point yesterday, 26. That pretty much slaps you in the face that it's done, 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 and gonna tumble, right? Okay, you want divergence and hidden divergence and power play ones and power play twos to smack you in the face like that. Okay, you're not really questioning much there, are you? And if I'm gonna trade live money against the trend, I want it to, I want to really see it. Make sense? Okay, so that was a little off subject, but the same subject of, oh, well, it's kind of dive. Yeah. My point is, do you see how that smacks you in the face clear as day? Wait for those. Don't say, well, they say 80%, preferably 50. This is 82. It's close enough. Don't do it. Do you see the difference there? One's a possibility, one's a probability. Go with the probability with your live money. If you want possibility, go to Vegas, have more fun with losing it. Right? So that was that. Okay? So guys, we've gone about an hour now. Was that helpful? Did that help you understand what we're talking about with the power play 1 and 2 and kind of what's behind it and why? Okay, and again, you know, you're already looking at a 30 tick chart. You know, this doesn't make you go and open another chart and, you know, have all this extra space taken up. And it's honestly not that complicated to look for. You know what I mean? You really only have to look at it when you're like, yeah, 30 tick, we're ranging, we're not trending no more. Oh yeah, range. Hold on, start paying attention for those power play things. It's really not something hard to add on. And yeah, Vincent, exactly. It's really just HDD and ODD on a bigger chart in a ranging market only within a bar size. That's it. It's just again, the title of the webinar, right? Reading market structure setup, reading market structure. And knowing, because a lot of times we get in a range bound market and we think, what? I can't really trade this. Or, I don't really know how to trade this. You know? But now you could feel a lot more confident in a range bound market on the 30 going, I do know when I want to trade this range bound market because now I know how. And now I know how to spot that market structure on the 30 to know power play 1, power play 2. Look at my sniper. I can feel a lot better about taking that sniper trade in a quote unquote ranging market now because of the 30 tick structure of a power play 1 or 2. Okay? So I hope that helps. It's very simple. Yeah, Jeff, it's really a simple concept. And it's something that you already have right in front of you. It's just another, yep, Chris, another club for the golf bag. Okay. Kevin says, how many 30 bars in a range are we looking at? Kevin, I'm not quite sure what you mean by that. If you're meaning like how many bars have to be between, I'm not quite sure your question. You don't want to be in 2 to 3 bar chop. I mean, let me pull over a 30 tick chart here. I'm not sure if I fully understand your question, but you don't want this right here. Okay? You don't want total 1-2 bar. Okay? Not coil chop, but range. You don't want this. Okay? So the first answer is not coil chop and not 2 bar, 2 bar, 2 bar, 2 bar, you know, not 1 or 2 bar coil chop, but truly a range. All right, where you've got, you know, a clear valleys, you know, clear valley and peaks, where it's, you know, clear range, not chop. Yeah, a Z formation or lazy Z's, I think Lori calls it. But a clear range where you're not questioning if it's chop. If you're having to question, I'm not sure if it's ranging or if I'm in chop, stay out. Okay. So I'm not sure if that really answered your question there, but that's the best thing I can say. No coil chop, no 2 bar. There's not a question of am I chopping? It's just clearly we're ranging. Okay. Now in range, let me check it out. Okay. So I mean normally that's going to mean you got, let's call it 3 or 4 bars. 3 or 4 bars. 3 or 4 bars. Okay. All right, guys. Well, look, I hope that helps. For those of you that were in the elite room this morning that heard that come up and you're like, well, what is that? Now, tomorrow morning in the elite room, you know what it is. We've got 200 of you here on the webinar that can be in the elite room, and all of you will be watching the 30-tick chart and calling those things out, helping each other look for those, helping each other be aware, hey guys, looks like we're in a range bound on the 30. Let's start watching for those power plays. Oh yes, great. Help each other out. Cool? Okay. Well, let's go ahead and end it right there. We've been about an hour. Yes, this is being recorded. I'll get the recording up. You guys can watch it again. And this, guys, is like this. This is one of the easiest things to go back and back test. Because all I got to do is pull up a 30-tick chart, throw on some ODD, learn to look for it. But, you know, start helping each other out. Call these out tomorrow in the room. Good, guys. I appreciate it. Do me a quick favor. Hop in your Sky groups. Hop on the Facebook group. Hop in the elite room in the morning. Recommend this webinar. Let others know how much you enjoyed it. Get them to watch the recording so we can all start watching and help each other out. Okay, guys, thanks so much. Have a great night. We will see you tomorrow. All right, good night.